Good afternoon, and thank you for joining the Payment Rewards, the Changing Scope of Incentives. My name is Sarah Phelps. I'm from Wells Fargo Bank. I lead a group called Loyalty Solutions. Before we get started, I want to thank Informa, InterSystems, our gold sponsor, and all the other sponsors and partners who made this possible, especially in the case that they allowed me to learn some special skills today. So I'm recording today's session using the PowerPoint screen recording, so bear with me. I think this will all work out. Hopefully it'll be fun and informative 15 minutes. So as we get started, let me tell you a little bit about myself. I spent 12 years in the consulting industry around payments. I worked for a firm called First Annapolis and doing co-brands and processing systems and payment strategy and mobile payments. And towards the latter part of my years at First Annapolis, I started up a loyalty and merchant offers practice. I have two daughters. They're a little bit older now, teenagers and swimmers, so they have a very busy schedule. My husband runs social media for Wells Fargo, and so as a dual income household, we're super busy. We moved to Charlotte a couple of years ago, and so we are in the heart of financial services. And I've heard that if you really want anything to be successful, you should use a picture of a dog. So there's our puppy Kana, who greets us happily every evening as we come home, and is actually on the floor sleeping as I give this presentation today. So where we are and where we're going, so I thought first I'd set a little context on the industry. Now, the last time I gave a presentation like this on rewards, it was in 2018, and in that presentation I talked about this concept of attention span and how we were communicating with customers on a 3x5 screen, and soundbite messaging and pictures were utilized to try to convey our points to our customers, and how important it was to make sort of really critical usage of any given interaction with customers to get our message across and convey program importance and program value. Now, I think our mind share has changed a little bit. Now we think more about an attention economy. The markets rapidly evolved even in those 2 years, with artificial intelligence and machine learning platforms gaining a head of steam, and cloud-based platforms driving down costs for ourselves and for our competitors. Those dollars in many cases being rerouted to deliver more value to customers. Social media platforms and their usage are growing among consumers and among our competitors, and all industries are exploring or doubling down on the strategic application for the above. On the one hand, with attention span, we used an 18-month iteration cycle to refine and evolve customer experiences. Now that iteration cycle is down more like to the 18-day mark. And those who can't sort of evolve into that faster realm of iteration will find themselves shot out the back as customer expectations are evolving that quickly. So the changing scope of incentives, and what does that mean to me? So in all of this context, I believe that hard incentives remain a crucial part of capturing customer intention and attracting business. But program sponsors still need to deploy value very efficiently. We can't continue to deploy rewards currency or offers or discounts across the board. We have to direct that value to the right customer at the right time, sort of gain their attention and capture their business. We have to compete for attention at scale. These artificial intelligence and dynamic platforms require us to think about not reaching 10,000 customers at a time, but 100,000 customers or more. In addition, we have to iterate, but we iterate safely at the pace of customer expectation and as rapidly as those customer expectations evolve. Even as recently as the second quarter, as the COVID and the realities of COVID started to unfold, you could see, particularly in financial services, how quickly value propositions tied to credit cards, both permanent and temporary, were adjusted within a few short weeks of the reality of the changes around travel and the needs for more sort of grocery and home improvement-based offers were needed. And you could see the consumers and financial services companies were iterating to meet those needs. When I think of incentives, I think broadly we have retail, travel, financial services, and a lot of the everyday spending categories as well, food, drug, dining, and gas. I've got experience in all of these segments, but what I wanted to convey in this part of the presentation is that financial services and payments really is the wrapper and the common element across all of these categories. All of these categories have rewards and incentives. All of these categories have that common element of payments, that will be a debit, credit, private label, cash, checks, otherwise. And it's that currency and the rewards currency and discounts and incentives that help us sort of engage our customers and draw them in to do initial and ongoing business with us. I have responsibility at Wells Fargo for the consumer credit rewards program called GoFar Rewards. If you're not as familiar with our business, you should know that we are the largest debit card issuer in the country. We also have co-brand programs with Dillard's, Hotels.com, a large retail private label business, as well as a merchant offer portal that we just launched this year that we're very proud of called My Wells Fargo Deals. With GoFar Rewards and My Wells Fargo Deals is only made possible with the help of some important partners. GoFar Rewards is powered by Epsilon-backed corporate travel management and Affinity. My Wells Fargo Deals, we have Cardlytics as a key partner, as well as American Express. So partnership and extending and iterating alongside of partners is an important part of our DNA, and frankly, it's the only way that we're able to grow. And so partnership is certainly an important element of how we succeed and how we'll likely succeed. So from here forward, I'll talk on the topics that Informa asked me to include in my remarks. These first few pages was really just to set the context and give you a little bit more insight into my lens. The three things they asked me to cover in my discussion was something around the critical importance of convenience, speed, and personalization in redeeming and receiving rewards. What works and what doesn't. Also combining reward and data sharing, a little bit more about delivering more relevant incentives to customers. And then finally, what's the next generation look like and how can partnerships or technology play a role? On that first topic, I interpret that to mean, my interpretation of that is beauty is in the eye of the consumer. At the end of the day, what works and what doesn't work is really interpreted by our customer, and I'll say a little bit more on that. Combining rewards and data sharing really comes to me down to data ownership. I think we have to be mindful and respectful of that to really move forward on delivering relevant incentives. I've been through a lot of conversations with potential partners who want us to kind of dump all of our data their way, and that's a little bit of a naive lens on how data sharing can work, and I'll have more to say on that in a few pages. And then this last piece I'll call the next phase. So in the context of beauty is in the eye of the consumer, I would say the convenience is really defined by consumers in a very different way today than it was in the past. It used to be convenience was sort of being able to kill two birds with one stone or add additional, combine your errands in a certain way, an organization of a shopping mall or the notion of a department store. Now consumers define convenience through individual interactions, and whatever is a positive interaction that immediately shifts their expectation to be aligned with the to be a new expectation of everyone they interact with, whether it be financial services, a department store, their grocery store. But it quickly, all experiences sort of get lumped together, and best in class quickly becomes the bar. So what doesn't work in that context is sort of coaching and coaxing customers to change their natural behavior patterns. So making their behavior experience and making their expectations be the way that you deliver, as opposed to delivering the way they expect to be delivered. Bright, shiny, episodic marketing to try to convince them of what their expectations should be is certainly not going to work. Consumers are more savvy than that. And in the area where likes and customer reviews and social media platforms give customers the ability to give active feedback on how you deliver and what you deliver, you certainly don't have the ability to convince them of what the real story is with bright, shiny, episodic marketing. And mouse print. Disclosures really are not a way to save you if your experience doesn't meet expectations. What does work is in context availability. So if you think of things like shop with points on Amazon, and providing access to rewards through in context in the checkout, making things easy, seamless for consumers, that's certainly going to get their attention and sort of win their trust and win their ongoing business. Support a digital experience that's clear, that enables them to sort of move from one page to another and understand what they're going to see on the next page, and enables them to achieve or execute on whatever activity they want to execute in, knowing what they're going to see and how it's going to progress is an important element. And then finally, transparency and simplicity. There's just no room for fine print anymore. Speed is being reinterpreted. You can't think of it in the traditional sense, with consumers being faced with wide swaths of stimuli and making decisions still in that 8-second time frame. It's not going to work to have time delays, and it just, attention loss is a real thing. Low fidelity screen loading, traditional fulfillment means where customers are waiting 5 to 7 days for delivery of physical items. Anything requiring follow-up by the customer or the program sponsor, if there's a next step or a break in the experience, that's certainly not going to work. What certainly does work in this context is messaging in the moment and intuitive multi-channel communication. And again, that word simplicity is going to come back. Customers want experiences and rewards that sort of show up when they expect it to show up, so that they can move on to that next critical activity, whether it be balancing their checkbook or getting dinner on the table or getting their kids to that next practice. In the next area, personalization, it used to just mean putting the name in the to line. Now it's really knowing what a customer needs before they do. And the real example of this for us is in My Wells Fargo Deals and in presenting relevant cashback offers to customers. What doesn't work in the space of personalization is sort of shotgun messaging that resonates really well with just the majority. So one offer for Walmart for $5 cash back, you can only rely on something like that for so long before it just kind of falls on deaf ears and the engagement levels drop. Generalizations disguised as segmentation. If you have a segmentation that looks like it's addressing sort of the majority of your audience in a single message, you probably haven't thought enough about what segmentation really means. There was I heard from a political strategist for Obama, and he used to talk about soccer moms and NASCAR dads, and what does that even mean? And that's an example of where segmentation can be an excuse to oversimplify how you speak to large customer sets and how you gain their engagement. You have to be able to measure and test in these contexts, and the only way that you can really win from personalization is to be able to look at results and iterate and evolve. Who owns the data? If you ask me, the realm of data, it's an evolution, not a revolution. So you're not going to have an overnight success in the context of data. I spend a lot of time wrapped up in contractual discussion about data ownership and how much data can you provide, and can you personalize, depersonalize the data, and PII and things like that. If you just think about the progression in its simplest form, we used to use customer data to meet experience expectations. Then we used it to meet customer need. Then we used it for predictive modeling to try and anticipate customer need. Now what we use data for is to learn customer need through artificial intelligence and machine learning, which combines all of the above principles and tries to evolve with the customer and understand their needs as those needs evolve. To succeed in this area, you really have to have three things: not all the data, but the right data. You have to think about your objectives on the other end and what's critical to get you there. You have to have the appetite for rapid integration and auditability. You can't put a solution in place and just expect that your partner, someone like me, is just going to look at a spreadsheet of results and be confident in their success. We're going to have to get into it. We're going to have to understand what we see at a granular level, and then build on those learnings and iterate over time as customer needs and expectations evolve. Key drivers of the data evolution are certainly going to be regulatory, security programs, privacy policy, competitive use, expectation versus intrusion. I think different customer sets interpret the notion of that personalized data and how personal it is a little bit differently, and we have to be careful about that. The changing landscape, recent California privacy laws have sort of adjusted things in terms of how we can deal with California customers, and certainly overseas, thinking about browsing history and personalization and the way to enabling customers to delete their histories with individual retailers may become our own reality at some point in the future. So we just have to be paying attention to those things. In the end, if we keep remembering that it's the customer that owns the data, and we have sort of a duty of care and a duty of ownership and a duty of value when we use customer data and we deliver something of value to the customer, and not just kind of use wishful thinking marketing when it comes to utilization of data, then both I and the partner should succeed because we're helping the customer succeed. Finally, the next phase. So where do I see this going? We just completed or otherwise known as what can the fintechs do? We just completed a survey looking at sort of our core technology, and we partnered with Accenture and Epsilon to sort of get a sense of what maybe some of our peer program sponsors might be thinking as well. And I think the upshot is it's an area of constant investment. Loyalty programs are an important component of the success of all of those categories that I said early up in the presentation. A lot of it driven by the fundamental realities of what I referred to earlier in terms of busy customers that are looking at a lot of information, a lot of inputs all day long, us still having services and products to offer that could make their lives easier, but we have to offer them in a way that actually does make their lives easier. We're all using or exploring artificial intelligence and machine learning platforms, cloud and fintech partnerships, various forms of modernization. There's a general desire to reduce internal complexity. So programs requiring intricate data interoperability are probably not where we're focused today. It's really about simplicity, not only from an integration standpoint, but from a customer experience standpoint. And I also want you to know that I do spend the overwhelming majority of my day on governance, controls, and compliance. So there are a fair amount of things to be cognizant of. So what does that mean for you guys? It means you should think about low integration costs. You should think about how your solutions give me access to new audiences or efficiencies, and the auditability and measurability of your solutions. So where do I see this going? A continuous evolution towards simplicity and convenience. Volumes will move out of legacy channels and into new ones. This is an evolution that I think will continue. Customers need to be met where they are, and I expect that there's going to be ongoing post-COVID cultural change. Some of the habits and norms that we're getting accustomed to today will probably stick. And then oversight and auditability for financial services is real. You should expect that your solution will get vetted, and that you should think of you as being an extension of the program, because that's what our regulators expect of us. So thank you. I think I'm going to take some questions now.
All right, we'll turn our attention now to some questions from the audience. A couple of you have submitted questions, and so we'll go ahead and jump right in. Sarah, first question our audience submitted: how do you know what your customers' expectations are at any given time?
So thanks, Greg, and thanks for having me today. I would say that we measure customer expectations by looking at both front-end and back-end metrics. So on the front end, we're looking at customer navigation as well as uses of various sort of options within the program, both from a navigation and information architecture standpoint, as well as use of various redemption options within the program. And then from a back-end metrics perspective, we're looking at what are customers calling about, what are the typical complaints or friction points from a case perspective, and then how quickly are we resolving those types of things. So that's a really good way to kind of take stock of what our expectations are and how we're meeting them.
Sure, no, that makes sense. The next one that came in, I think, is kind of a general one. I'm actually really curious myself. What are the upcoming innovations in payments rewards that you are really excited about? What's on the horizon?
So I would say that the thing I'm most excited about is you asked me to be brief, so I will be brief, but I have noticed in the 10 years I've been focused on rewards is that the composure of program managers and the people that sort of are in the decision-making seats is that we are a lot less about attrition and breakage and much more about utilization and engagement. What I'm most excited about is all of the innovations that put rewards in the hands of customers to actually use them. So there used to be a lot of tactics around devaluing currency and limiting access and utilization. And now there's a lot more energy behind utilization in the basket, shop with points, PayPal integrations, things like that, and mobile payments. So I'm super excited about that, giving customers more access and ability to leverage their rewards balances. So that excites me.
Yeah, no, easy to understand why. Some really cool stuff on the horizon there. And I think, keeping the customer at the center of the equation has been kind of a recurring theme today. So not a surprise that one has popped up here as well. The next one from our audience, what's next for customer data? I'm presuming they're talking about using it as opposed to kind of storing it from a logistical standpoint.
Yeah. I think, and I made a statement in my remarks about customer data belonging to the customer. I think what's next in customer data is certainly giving them more control, but more importantly, using customer data in a way that benefits the customer and not benefits the business. So what we have had a tendency to do is to use customer data to try to convince a customer to do something that they frankly are not terribly inclined to do in the first place. You've made a statement, I think, in my remarks about segmentation, which was really just another version of generalization. Where I see segmentation, where I see customer data heading is with artificial intelligence and machine learning. We evolved to a state of sophistication where we're actually anticipating customer need and meeting customer need, as opposed to just frankly forcing something on them that they have no interest in. And we've done way too much of that as a payments industry to date.
Yeah, and I think that's a really good perspective as well. So I think last question that we have here, I'll kind of give it an open-ended one, which is relatively simple, but how can fintechs help you? This is a really good one to close out on.
Yeah. So, and thank you for that. I think, so for us, I look at our, so individual rewards program scale. So speaking from the perspective of Wells Fargo, even though we are one of the largest financial institutions around the globe, we still have a limited view of the customer. And while we would love to think that we can perfectly predict what that next best item is and what that next need is for a customer, we only can go so far. So the way that a fintech could help us, I think the best, particularly from a loyalty perspective, is how do we deploy the value of our rewards program in a way that will best meet the customer's need or best enable that customer to deploy that value in a way that benefits them. So I don't necessarily want a customer to use $1 on PayPal when they should be using 100 to buy a new toolkit to do a home improvement project. So those are the kinds of things, if a fintech could focus on that, that I would love that.
Excellent. I think that's great. Hopefully you're giving some ideas to the fintechs who are watching here today. Sarah, thanks so much for taking the time. Appreciate both your presentation and your sticking around for some questions after the fact.